Welcome to Capital Link's company presentation series.
I am Loukas of Capital Link, and I would like to welcome you all to Capital Link's company presentation series. We have with us today the management of Safe Bulkers, who are going to discuss their company's strategy and the sector outlook. A reminder about the disclaimer that this is not a solicitation to transact in any securities. It's not meant to be investment advice or advice of any kind, and it's purely for informational purposes. In terms of logistics, there will be a slide presentation followed by a live Q&A session. There is a Q&A button at the bottom of your screen, and please, the participants can submit questions anytime they want during the session, and they will be answered to after the slide presentation. This session will be available as an archive for accessed upon demand later on. And with this, I will turn it over to Mr. Loukas Barmparis, the president of the company, and Mr. Thanasis Antonakis, the assistant CFO and chief compliance officer. And I think we may be joined also by Konstantinos Adamopoulos, the CFO. Thank you.
Hello, thank you, Nicholas, for this presentation, and we're happy to make a quick presentation of our company. This time this year, we have started in 2023 amid global concerns, wars, etc. So it's good that we are able to communicate with our investors and be able to say a few thoughts about how we see the present situation, the company, the market, and the status of the and the status of the competition. If Thanasis, we can go to the next slide. We see that presently the charter market is quite weak. And it's something that should be anticipated. It's not something that does not happen during such period. We are very close to the Chinese New Year, and the market is performing quite. The activity is very low in both sectors, in Capes and in Panamaxes. If we go to the next slide, here we can see certain things about certain information about the commodities. The important thing is that there is an uncertainty and monetary squeeze, which reflects the actual situation worldwide. We have tightened monetary policies. We have the war in Ukraine. We have the concerns about GDP. Generally, as we see here, the GDP growth is reduced for major economies and for the world. We have embargoes in Russia. So we start this year with the demand weaker than usual. However, we expect that during this year, the demand in terms of growth will be 1.1% in terms of the transportation capacity, in terms of ton miles by 1.5%. If we go to the next slide, the important thing is the supply, and this slide shows our thesis about the supply of the fleet. You see that let's say the medium-sized vessels, Panamax, Super-Panamax, is aging. We have more than 15 years, about 25% of the fleet. The order book is generally quite low compared to historic numbers that we have seen the past decade. And we can see also the mix of Japanese to Chinese vessels. It's almost in the drybulk sector, it's almost shared. Half of the fleet is produced in Japan, and the other half of China, we have, let's say, a small number of vessels produced in South Korea and in other places. If we go to the next slide, we can see here the basic operational characteristic of how we go along. The important thing is that we have entered in an era of, since the 1st of January 2023, we have entered into an era of new regulations in relation to greenhouse gas emissions. And as we all know, a large number of ships does not comply with any of the phases, phase 1 or phase 2 or phase 3 of the IMO. Each phase means a reduction of by 10, 20 or 30% reduction of the CO2 emissions compared to 2008 level. And you can see here that basically we have 0 phase 3 vessels, some phase 2 vessels, a little bit more phase 1 vessels, but there is also a vast majority which does not comply with any phase. And also in this, in all such ships, we will have the EEXI regulation being implemented, which means that reduction of power by 20% will be required to all vessels. If we go to the next slide, you see here also another characteristic about the market is the fuel oil differential between the very low sulfur fuel oil and the HFO. And this is giving quite good profits in vessels equipped with scrubbers. And in the 2023 we have $180 price differential per metric ton, and today it's $214 per ton. The important thing here is that our most heavy vessels, like our Capes and our Post-Panamax, are equipped with scrubbers, and this gives the opportunity to make additional profits on the basis of this price differential. But we will say all these things a little bit later in our next slides. So if we go to the next slide, we make a summary of the market takeaways. We have increased volatility because of the geopolitical disruptions in the tight monetary policy. There is generally weak demand, which is related to the concerns about the growth of the global economy. The fleet is aging, the drybulk fleet is aging. There is a low order book, and these two factors may affect the recovery, of which we believe probably that we are at a very early stage. Additional requirements that are placed is the performance for ESG framework and Paris agreements and adherence with environmental regulations. The supply and demand equilibrium will be affected because of such environmental regulations, causing inefficiencies. And for people who are able to invest at this time of the year in more efficient vessels, or who have invested in more efficient vessels, this is very important. I mean, for us, you are aware that we are investing for 11 ships, which is a large number, basically 25% of our fleet, with phase 3 vessels that will be able to provide a competitive advantage in the following years. Also, another parameter is that these new environmental regulations favor fleets with Japanese vessels, because before 2014, the ships that were producing in Japan were generally more efficient compared to the ships produced in China. And so fleets with Chinese vessels built until early 2010s will have a disadvantage, and they may need to run with substantially lower steaming compared to other ships built in Japan. Also, vessels which will be equipped with scrubbers, as we know, will have this benefit, and this benefit will increase gradually because from the 1st of January 2025, also Mediterranean Sea will be an ECA area. So the profit that we can take from scrubbers will be expanded. We need to understand that coming into this era, the new era of these greenhouse gas emission regulations, the valuations of the fleet of the vessels and the operational and the earning capability of the vessels will be related to their operational performance, their environmental performance. So the companies must differentiate on the respect in order to be antagonistic. If we go to the next slide, we can see a number of let's say a number of key points about safe bulkers. The important is that the shareholders, the public shareholders, are fully aligned with our management because the management owns 40% of the company. The fleet of our fleet has been built basically in top yards with our own supervision, most of the times in Japanese yards. We have a fleet expansion program with aggregate 11 ships. 5 ships will come during 2023. Our loan to value, the loan to value of the company is 35%, which is very comfortable for any expansion or for any opportunistic for any opportunity that may arise. We have a dividend yield of 8.1%. We have contracted revenues of about 327 million and strong liquidity, which give us always this flexibility to act very quickly. Our fleet consists of 44 dry bulk vessels presently, 12 Panamax, 7 Kamsarmax, and 17 post-Panamax, and 8 Capes. We have recently expanded in last year in the Cape market, taking certain second-hand, a number of second-hand Capes, most of which are already chartered for 2 to 3 years. So the company is enjoying contracted revenue from these Capes without being affected from the low market of the Capes. As we said, of course, the quality of construction is very important, and 80% of our fleet is Japanese built. OPEX is very important, and we can reduce OPEX because we have good sister vessels. And let's say by the end of during these environmental regulations, we will have basically 12 eco vessels which were ordered back in 2013 and were delivered in the previous decade, and we'll also have 11 ships phase 3. Which will be substantially more efficient and basically will be the best ships in the market. The company has already installed in 2022 scrubbers in 18 vessels, and by the end of 2023 we'll have 23 vessels with scrubbers, and basically installation is always in the most heavy consuming vessels, so we'll take the maximum advantage, the best return on the investment. We also have environmental upgrades, and we have already done environmental upgrades in 7 of our vessels during 2022, and 21 vessels will be upgraded during 2023. We say all this because basically all our fleet, basically apart of 2-3 vessels that will not go to dry dock, will either be eco ships or phase 3 ships or upgraded ships with higher environmental efficiency. And basically this means that these ships will be able to compete on the basis of new environmental regulations. The average age of our fleet is 10.5 years, and because we are selling and buying new vessels, we expect that this average age will be maintained constant the next 2 years. All our ships have been equipped with ballast water treated systems. So basically, this investment has finished. We're still using the investment for scrubbers. So we still have 5 scrubbers to fit. And we have this upgrading program of 21 vessels. And as we said, about half of the fleet will be either eco or phase 3 vessels. If we go to the next slide, we cooperate with major charterers, well known, and this gives us a security of our cash flows when we have period time charters, and this is the basis of our chartering policy, to charter in a low market in the spot, and we can charter when we have this opportunity for longer periods with these names that may secure our cash flows. If we go to the next slide, here we show our fleet expansion. We show our extensive new build program that we have already taken delivery, the 2 phase 3 vessels in 2022, and we will have 7 vessels by 2023, 10 by 2024, and 11 by 2025. I need to say here that it's quite challenging to order new ships, phase 3 new ships, because another concern has been risen recently. It's about transitional fuels. So we need to understand what will be the fuel that will prevail in the future. But our company was able to make these orders at very attractive prices back in 2019, 2020. And this gives the opportunity to have a young, modern fleet and not wait to get to see what will be the result for the transitional fuels, which will be probably decided in the next few years. If we go to the next slide, we see here in more detail our cash flows, what is our cash and how we are using it. Sorry. The scrap value of our fleet is 390 million. The debt is about 447 million. And basically 100 million is unsecured debt by a bond or at 295. So the company has quite low leverage, as we said, 35% consolidated leverage, and 1/4 of it is with fixed interest rate of 295. If we go to the next slide, we see here the liquidity and what is the Capex. So we have paid advances for our next new builds, 61 million. The Capex altogether is the remaining is 254 million for the new builds, but the company already has substantial cash and undrawn borrowing credit facilities, which makes the ability to finance the program very easily without any additional leverage. If we go to the next slide, we show here our dividend policy, which was stable over the last year, and basically because the market was corrected, we see that the dividend yield has increased substantially, and this may give one opportunity and one good entering point to our investors. or to people who would like to invest in our company. We also have an active common share buyback program by the company, and have already repurchased 2.8 million shares. If we go to the next slide, we say a few things about investing Rationale in safe bulkers. We have a low leverage, we have liquidity, a strong balance sheet, lean operation, contracted revenue, which gives makes our financial flexibility substantial. We have a fleet that is being renewed, like most of our peers, with 11 the most efficient vessels. Our fleet is Japanese. We have a very highly experienced management team, proven track record. We have substantial number of scrubbers, 18 scrubbers plus 5 that are being installed during 2023. We are focused on ESG. We have forged a relationship with our charterers, lenders, and capital markets in relation to ESG. And we are active on the environmental transition in order to understand better and quicker than the others where we should be heading. We're rewarding our shareholders with meaningful dividend, and we believe that safe bulkers price is attractive at this point, because it's probably, I mean, if someone could make the actual calculations, we will consider that it's traded substantially lower than the net asset value. Here we show a few things about our ESG, environmental social governance, or our policies, which there is no need to repeat, and our environment ESG report, which is published every year, showing our investments and our performance in terms of the environment. We believe that by completing this number of investments, environmental investments, we will be able to upgrade the whole fleet substantially and be leaders in this area. If we go to the next slide, is there something else that we need to show? Yeah, thank you very much for this. That was our presentation, and we hope that we'll be able to have a chance to speak directly with our investors during the Capital Link Forum in New York, which is I think on the 20th of March. And we're happy to respond to any question right now, or you may also contact us through email and arrange conference calls with each one of you and explain our rationale in more detail, and you may ask additional questions. So thank you very much, and we look forward to receive additional questions if you have.
Yeah, Loukas, if we could move forward to the Q&A. We have some questions from the floor. The first one says, how do you think the CII will affect commercially the dry bulk vessels?
Look, it is important to say that CII is a major change in the behavior of how companies will be active in the future in the dry bulk and in all sectors, basically, because we cannot claim that we don't know what's happening with the environment. We all know that most vessels, all vessels will have to apply the 20% reduction of load reduction if they are not if they cannot comply with the existing regulations. So some vessels may be able to go with a slow steaming in order to achieve this. But as we move along, it's not what will happen in 2023, but what will happen in the next 3-4 years, because the development and the rationale of chartering a vessel will be completely different. Maybe I strongly believe at a certain point of time, by having a very low-rated vessel, you will not be able to visit mostly, maybe after 2026, but we will not be able to visit many ports worldwide. So it will be restricted in trade, and our company will not have this problem.
Yeah, next question refers to the percentage of the dry bulk fleet which is expected to comply with phase 3 regulations.
Yes, I mean, as we saw in this table, there is a large percentage that does not comply, and all these vessels will need to do to install energy performance limiters, which basically need to install limiters to limit their ability to run into higher loads and speeds. For most of the vessels will not be a problem, but if there is a vessel which has a heavy consumption, that would be a problem, because by going to a very low steam, we will be quite uncompetitive. I think we'll see substantial changes in the operational characteristics of the market, and people will differentiate, and at least we try to differentiate on the basis of environmental performance, and we'll see that a two-tier market will be developed that will boost companies that have invested in environmental technologies, and that will let's say prevent other companies to be operational in that have not invested in these technologies.
Okay. Next question refers to liquidity. Based on your liquidity, what is the investment strategy of safe bulkers?
Look, this question is quite similar. I think we have communicated quite often how we are investing. We have done the investments at this stage. We have ordered the 11 phase 3 vessels. We have bought certain younger vessels and sold older vessels. But we are not in a hurry to act right now, because we need to understand what will be the technology that will prevail in the future. There are so many things that each one of us have heard: methanol, ammonia, hydrogen, LNG. All these are things that may be considered. The advantage compared to the other companies, to our peers, is that we have already invested. So we're not waiting for 3-4 years to see what will be the end result in order to do additional investments. Having said all this, it doesn't mean that we are not active in the forefront of technologies. We don't monitor, and we will not participate in any new ideas when they are developed.
We have a question about the Japanese-built vessels. What kind of premium on rates and resale value can you get on a Japanese vessel vis-a-vis a Chinese-built vessel in today's market?
Look, let's say something that compared to, I mean, a phase 3 vessel, I want to focus on the phase 3 vessel, which basically burns 4 tons less fuel compared to another good vessel in the market. I'm not saying about a Chinese or Japanese, but a quite competitive vessel, because the phase 3 vessels are new. So you just make the calculation, just multiply, let's say, 4 tons times the price of the fuel, and you will end up with what is a daily additional premium that you may get.
Next question relates to the preferreds. Is it possible to borrow today at lower than 8% rates? And if so, why not call the remaining preferreds?
Look, there is no need for us to do additional borrowing these days. But when we were able to do that early last year, we did it. So we have done our investment, our borrowing by having this this bond in the Athens Stock Exchange, which is traded in the Athens Stock Exchange at 295%. I don't believe that it's a euro bond 295 fixed unsecured. I don't believe that someone can find something similar in the market. Of course, today, if you want to get a loan, normally you need to have the spread plus the so-called LIBOR. So probably the calculation of this would be more than 4%. But the company is in such a position, we have created such liquidity that it's not required to do additional borrowing if there is not specific need.
Also, Loukas, if I may add here that we did a substantial deleveraging in the last couple of years, putting down prepayments of debt of more than 200 million. Also, we redeemed 38 million of the preferred part.
And also the preferred part, the preferred shares are perpetual, it's equity. So, it's not exactly fair to compare with borrowings.
Okay. Next question comes to the savings of the new vessels. Can you give us an idea of the savings the new vessel Vassos and Climate Respect have versus, let's say, a 10-year-old Kamsarmax or post-Panamax?
Look, I told you just before, it could be about 4 tons of savings per day of fuel compared to our other ships that are in the market. So it's a very competitive advantage and cannot be ignored by any charter because the charter sees basically the total cost. The charter sees what is the chartering cost plus the fuel cost. So if you have if the fuel cost is substantially lower, then you can get higher chartering rates.
And also, if I may add here that with the new environmental regulations kicking in, like the EU ETS that is forthcoming, then this advantage of fuel savings will become increasingly important going forward.
Just to give you an idea, if a vessel burns, let's say, 25 tons of fuel per day, and you multiply that by three times in order to go to CO2 emissions, you go to 75 tons of CO2 emissions per day. So the ETS for the European Union ETS, which will start in 2024, and it will be 40% of the final amount, and then in 2025 will be 70%, and in 2026 will be 100%. This amount basically is what? It is the 75 times about 82 euros per ton. Yes, which is right now. So it is very. The vessels that will not. The older vessels and the less efficient vessels basically will not be able to come to Europe without substantial penalties.
Next question relates to the asset side. Are there plans to sell more older vessels? Are there plans to sell more older vessels?
Look, we always have plans to sell older vessels based on the charter market and on the price that we have achieved. We are not in a hurry because all our vessels are quite advanced. As we said, we have basically Japanese fleet, so the vessels comply with present regulations. But eventually, when the time comes and if the market permits and if it can get a good premium on the sale of the vessel, we would prefer to sell some older vessels and order some new vessels, or even buy younger second-hand vessels as we did in the past.
Next question about the dividend ratio. Will SB dividend payout ratio increase in the short term? Why should someone invest in SB?
What we did in the past is that we decided not to to increase the payout ratio because or to change the dividend policy. Not because we are not ourselves shareholders of SB and we take benefit of such an increase, and we are the largest shareholders, but because we wanted to direct a large portion of our free cash flows towards the new investments. So we believe that as the company is able to invest, to take delivery of the next vessels without leveraging the company substantially, and as what we believe the operational characteristics of a new environmental era will prevail, the profitability of the company in the future will be such that will permit an addition in the dividend, but it's not something that we are seeing right now.
There is one question. What is your view on the dry market going forward? I can take that up.
Okay.
As we mentioned in our presentation, we expect that the dry bulk demand will grow only by 1% within the 2023. That's a combination of factors mainly relating to the dry bulk falling more than 20% in the first 10 days of 2023, and the Chinese New Year being really early this year in a week or so, and of course the seasonality. But on the longer front, we do have some good news to expect. We expect that the Australia coal ban will be lifted eventually, and so the coal imports will increase. We have seen the zero COVID policy be lifted gradually in China, which means that that is good news for the dry bulk. And we've also witnessed that the Chinese policy officials have set as a priority to push for economic recovery within 2023, and using all economic tools out there, like proactive fiscal policy. They already announced 150 billion of stimulus directed to their real estate, sector, and they've also recommitted their Belt and Road Initiative investments, which is also boosting, of course, those investments in the infrastructure overall. We do expect that the iron trade, though, will be flat compared to 2022, and minor bulks and grains will be at the point of 2 and 3% increase within the 2023. That's about it. We have no more questions from the floor. I don't know if you would like to finish with a closing statement. We have like 4 minutes.
Well, you've got a very good set of questions, Thanasis, so it has been a great discussion so far. So if you have any closing statement, otherwise we will...
Okay, thank you. Is there a question or?
No.
No, okay, so thank you for participating in this event, and we would like to thank also Nicholas Bornozis for this facilitation in this presentation. As I said, we are working here continuously to make value for our shareholders. Our interests are fully aligned. We have the best, the ships that we have ordered are the best in the market today. This will be shown in the future. Do not hesitate to send any question or to arrange through our capital link or directly to us any conference call to get additional information. And of course, we'll be happy to see you during the Capital Link Forum in New York. That the whole team will be present there, and we would like to see to explain our strategies. Hoping, of course, that the low supply of vessels at certain point of time will pay, and the charter market will be substantially higher in the future. Thank you.
Thank you, Loukas. Thank you, Konstantinos, and thank you, Thanasis. And as a reminder, this session will be archived and available for replay upon demand. So thank you very, very much to all of you.
Thank you.
Thank you.